Welcome to a new era. An era where financial technology is paving the way to improved financial services. Who in this room never heard about Fintech? Don't be shy, raise your hands. Well, Fintech, which stands for financial technology, has been heard intensively for the last few months. It may seem new to you, but, well, let me tell you. Fintech was actually born in 1967 with the first ATM by Barclays. Not really new, not really Fintech, you'll tell me. That's probably because you're used to it. Let's take a more recent example. PayPal, 1998. This was already a revolution at the time, 20 years ago. The only thing you had to do was insert your credit card details just once, and then you could make any online purchase. The only things that are different today with Fintech are the pace at which they occur, the extent, and the impact it has. A lot of these technologies and these innovations happen behind closed doors. So, have you ever fantasized about what is going on behind the doors of your bank? Do you believe it's like a big vault? A vault holding reserves of gold? Or maybe better, more technological, where there are thousands of computers doing millions of computations? Sorry to tell you, this is not really the case. From my experience, this is far more complex, with a large spectrum of actors you do not even know they exist. They are all there to ensure one thing: your transactions are processed effectively and correctly. Since 2010, since the financial crisis, there is a surge in regulations that are imposed on these giants. We call that the regulatory tsunami. This is because the financial sector has been submerged by thousands and thousands of pages. They have to read, they have to analyze, they have to implement, and this before a set date. Sounds like mission impossible, trust me. And as in many situations, when you have an issue, you strive to find a solution. And this is why a lot of employees from the financial sectors, knowing these issues, are bringing solutions to banks, investment funds, anyone from the financial sectors, because they're convinced they can do something to help the financial sector. But Fintech is not only about banks, and there are far more terms behind it. Let me guide you through some of them. Let's go back to our regulatory tsunami. There are compliance departments, financial institutions who are dealing with all these regulations. And to do so, it's like trying to find a needle in a haystack. There are thousands of lines extracted most often by Excel, and people like you, like me, are checking line by line whether there is an issue with a potential transfer or payment. Let's take the example of a regulation which is directly to detect whether payments are linked to terrorist activities or money laundering. To do so, you have to ensure that the payment is not made on a regular basis or is not over a certain threshold. In a lot of institutions, this is a manual process. Are you asking yourself at the moment if this is normal? What about errors? What about subjectivity? And you're right to do so. And this is why solutions using artificial intelligence or automated calculation are being developed. They are also directly detecting anomalies or spotting errors and filing it to the regulator. So there is less human interaction. Now that you have an overview of what is going on behind the scene, you might want to know if there is something you can actually see, touch with your hands. I'll give you an example. Nowadays, we tend to take for granted the online banking. But just go back in time, 3, 5, 10 years ago. Yes, that's correct. You were all doing it by paper slip. You had to fill it in, bring it to the bank, and wait for days to receive the paper statement to ensure the process was correctly made. Today, you just take your smartphone, day or night, and you check your balance. You perform your transfer. You change your daily limit, all at a fingertip. Now, let's think about insurance. Really fintech, not really fintech? This is still a discussion we all have. But this can change the world. Let's make a quick survey. Who here in the audience is traveling? Good. Who never got sick while traveling? Well, those of you that never got sick are quite lucky. I'll take an example. You are with your family, and you're enjoying the Big Apple. And your kid has the appendicitis. It will cost you around $13,000 for the surgery in the US. What you will have to do is to call your insurer and ensure that when you go back home, you will be reimbursed. You would be stuck with administrative and the worry that you will not be fully reimbursed. In the future, what could happen is that your insurer gives you a credit card and it could top up by distance. So you would go and travel, and if you need it, like in this case with the appendicitis, you would just call him and say, okay, I need your help. He would just top up the credit card, and the only thing you would have to do is just be at the bedside of your kid. Fintech is also a reliable way to bring financial access to what we call the unbanked. The unbanked are people like you, like me, often in remote areas, and they lack access. They cannot benefit from a simple bank account or saving accounts. They have observed a rise in telecommunication in these countries. And this is good because telecommunication providers have actually partnered with financial services, and they are bringing these people with the possibility to save money via SMS, do basic operations, or even transfer money in a safer and faster way. Now let's go to the hype. And I'll ask you one single question. Who here owns crypto assets? What do you own? Which kind of crypto assets? Bitcoin. Well, there is Bitcoin, but there is Ether, Filecoin. There are so many of them. Actually, there are 2,000 of crypto assets at the moment. We have to be cautious, though. They are not without risks. They can present some risks, such as scams or loss of money. Crypto assets are not something that you can touch. They are virtual. You will never be able to touch a Bitcoin. What you'll have, however, are two QR codes, or two keys, as we call them. One, which is a public key. The public key is similar to your IBAN. This is something you give so people can transfer money. And then you will have the private key, similar to your PIN that you're using for your credit card. These keys form the crypto part of your assets and prevent it from being stolen. Crypto assets are based on what we call the blockchain. This is similar to a database, but this database prevents any intermediaries as we know them. This is what we call dematerialization. We are witnessing a willpower of people who are willing to have a financial system that is reinvented reshaped. A system we can trust, which is rapid, without the possibility for intermediaries to interfere. It is sometimes difficult to fully grasp crypto assets because they comport risks, but also because they have endless applications. In parallel to money, there are payments. And payments are, let's say, being reshaped in parallel. If we take the example of a survey that was published earlier on this year and the year before, 34% of the Europeans are in favor of a cashless society. This is pretty amazing, and we are experiencing leapfrogging in this area. Leapfrogging is when, in fast-growing economies, you are taking shortcuts to implement technologies by not implementing some developments that were needed previously. And this is why we can experience so different developments between countries or continents. Let's take the example of Asia. Asia, you will see that a lot of people are using smartphones to pay. Why so? Because when it was time to develop card systems, the government thought this was not a good idea. Banknotes were sufficient. In fact, the government invested highly in telecommunications. Everybody was fitted with a smartphone. So when the developments were touching smartphone and allowing you to pay via your smartphone, it was a no-brainer for Asian people. While in Europe, we invested massively in credit card terminals and systems, just in lieu of credit notes, banknotes, or checks, except for the French friends who are still loving their checks. And this, when we developed the contactless technology, this was a no-brainer for Europeans. You have to know that, in average, European owns 1.7 cards. It is so easy now for them to just tap the card on the terminal, and much faster than actually paying via your smartphone. This is why developments are so different between the various countries and continents. We often associate technology with risks, and you're right to do so. Cybersecurity, scams, loss of jobs. We tend to fear technology that no one fully appears to master. But next to the risks, there are benefits. And benefits such as ease of access, improved customer experience, safety, enhanced transaction processing. Without any doubt, there will be some jobs that will disappear. But this will also allow people to focus on analyzing instead of doing repetitive tasks, leading to fulfilling, value-adding jobs. New jobs will be created, similar to previous industrial revolution. And we are already witnessing the availabilities of upskilling. Making your life easier, seamless, with the possibility to answer effectively to needs you do not know you have. This is what FinTech is all about. Let's embrace the change. Welcome to the future. Thank you for having me.